people that we're working with, Jeremy, the ones that we're having these conversations with, they're builders. They're people who know that the journey of life, it's ongoing. There is no arrival. And we're always looking to leave things in a better place. So we talk about being the lighthouse instead of the tugboat all the time. We talk about how we stand for light, we stand for truth, and we're trying to align ourselves with those individuals like this woman who, you know, with your little bit of guidance, like very little guidance from you, is already like, wow.
Welcome to another episode of WealthWise Banking. Today, Jason Sipple and I are going to talk about liquidity and legacy without heirs. So many people think that an infinite banking policy is only for those people who have a spouse or children. But even without a traditional heir, an infinite banking policy can actually be used to provide two powerful outcomes: emergency liquidity today and legacy impact tomorrow. In this episode, we're going to explore how to build a policy that supports the immediate cash needs during a financial rough patch, while also creating a powerful and purposeful legacy by naming either a charity or a nonprofit as your beneficiary. This is also about starting where you are, expanding as your income grows, and aligning your money with your mission. So with that, Jason, let's get into it.
Jeremy, thank you for the warm welcome, man. I'm so excited to have another episode. Jeremy Lee Huggins, this is Jason Patrick Sipple. And I'm excited to talk about this one because it's coming up more and more. And I had a thought while you were introducing this. Why? The two thoughts, and I know one, you already know the answer. You might not know the answer to this one, but why do you think people believe that they have to have a spouse or children to use this concept?
Yeah, well, it all comes back to the product that we use to implement banking, right? So typically you need what is called an insurable interest to open a policy on either a family member or a business partner.
And they're thinking because it's whole life, like it's about the death benefit and it's expensive. That's the two things that someone coming into the conversation without a spouse, without kids, are like, well, I don't know if this is for me. And so what we're going to not only challenge, what we're going to turn upside down is we're going to show you it is not necessarily just about that piece, that cherry on top. It is more about the control, the guarantees, and giving your money two jobs simultaneously. And we're going to kind of walk you through a couple real life case studies. We're going to talk about these things together. And Jeremy, I know you were, if you want to kind of dive into it a little bit about how and why this is still a fit for someone that comes into the conversation thinking, I don't know if this is for me because it's whole life insurance.
Yeah, I had a member, no kidding, this very morning, and I was speaking to her. She comes from a background of veterinarian clinics, right? Sold her business. Now she's kind of, starting over, getting into the nonprofit space, but she's unmarried. So no children, no spouse. And she was looking at how does this infinite banking policy fit into my lifestyle? And the first question I asked her is, what do you care about? Like, what are you doing today? And she said, well, I have a nonprofit, and her nonprofit is actually geared towards helping disabled animals. And she does it for lower income families, right? So people who have animals, and your animal, like my pet, as you know, is part of my family. And I would be devastated if I couldn't afford to get her the healthcare that she needed. So she has a nonprofit specifically for disabled animals. And coming from her background, she said, this is what I care about. This is my mission. This is what I want to do now. So we started talking a little bit about how she's going to continue funding that nonprofit after her, right? She talked about traditional means of raising money, putting the right people in place to help run the nonprofit. And I said, well, what about your policy? It's tax-free. It's a large amount, right? That comes in immediately, avoids probate. She hadn't thought about that. She hadn't thought about how an infinite banking policy could actually benefit the nonprofit where she's spending all of her time today.
And you're talking about the multiplying effect, right? You're talking about the fact that all the way up to the end of any of these designs, that your death benefit is always going to exceed your cash value, even if we're designing it for higher liquidity and other things. So that's a really, really powerful point you just made. And what I want to point out is what we're not talking about, right? There are people, because this is not for everyone. You and I talked about that before the show. This isn't necessarily for everyone. Like if you want control, you want guarantees. And like Jeremy said, this woman, she has a mission. she wants to leave the world a better place than she found it. So the people that we're working with, Jeremy, the ones that we're having these conversations with, they're builders. They're people who know that the journey of life it's ongoing. There is no arrival. And we're always looking to leave things in a better place. So we talk about being the lighthouse instead of the tugboat all the time. We talk about how we stand for light, we stand for truth, and we're trying to align ourselves with those individuals like this woman who, you know, with a little bit of guidance, like very little guidance from you, is already like, wow, I can create more. I can do more than I even imagined. Not only can I do today what I'm really passionate about, but I can leave that thing that I'm passionate about, my mission, the animals with disabilities for the lower income families, in a much better place.
Yeah, really the three words I think she's focusing on are control, liquidity, and legacy, right? So those are the three things that she's focused on how can I continue to expand this well beyond me? Because the nonprofit's running really for the lower income families and their pets, but she's trying to ensure that it continues on well past her. And that would be her gift back to the nonprofit, right? From her graduation day. So just because there's no heirs doesn't mean no need. It actually means that there's more freedom to decide how she's going to use her legacy, how she's going to be remembered.
And it also has her, like all creators, all builders, it has her sitting down and saying, what's really important? What do things look like a decade from now, 2 decades from now, several decades from now, right? She is breaking free of the confines of short-term thinking. She's breaking free of the survival instincts, like we talked about Maslow's hierarchy of needs. She's breaking out of that base level of survival, and she's looking for the self-actualization at the top. And all of a sudden, you, through this great vehicle, this great system, have unlocked that for her. She's like, wow, like I can do this and that, Jeremy. And my dollar's doing two things at once. I'm saving it. And if I need it, it's there for liquidity for me. So let's dive into that a little bit about why, as soon as she starts this, it's doing more things than she was even aware of.
Yeah. So because she ended up selling her businesses, right? She's not bringing in the same sort of income she was before. And the income, so the cash value piece of it, actually has just become the emergency liquidity for the nonprofit. That's what she's building it for. So not if, but when life happens. So this one policy is serving two designs for her. It's giving her the emergency savings to be able to respond, while at the same time helping her pass on her legacy after her passing, right? So she has multiple designs that are already built into it. And I think it's also kind of cool because she doesn't have to just name that nonprofit. Like, let's say that her system continues to expand over time. What about her church? What about an educational institution? We can name multiple beneficiaries. Even on the same policy, you can have multiple beneficiaries. So I think that's kind of cool and eye-opening for her as well.
And then another thing that I've just kind of picked up on in this conversation is, now I want everyone listening to this, think about, what is your thing? Maybe it's your family, but if, again, this conversation's around folks without spouses, without heirs, without children, that, maybe like the guy I just talked to is going to leave it to his siblings, no kids, right? Or I talked to someone earlier this week, her and her husband, both in their early 50s, both very successful, no debt. So they're already in the 5%, right, Jeremy? Like they're already in a very small, select few of Americans without any personal debt other than a mortgage. And their goal was simple. And the reason I'm saying all of this, you, the listener, what is your goal? What is your mission? What is your vision? And think freely, right? Think freely, because this is a multiplier. Like when people say you can't buy your legacy, that ain't true. That ain't true. All right. It is not true, because that cash value, whatever, your age, your health, and how much you're putting in, is going to be multiplied in that death benefit that is guaranteed to be paid to what you care about. And that can expand. So I want you to think, what is your goal? What is your mission? Make it really personal, because this is about you. When we have these conversations, we're meeting you where you're at today, and we're helping you build a roadmap for the next decade plus, because it is about continuing to create, continuing to give back, continuing to add value, because then the blessings are just going to flow to you more and more. So as long as you're not driving, no hands off the wheel here. But make a note or make a mental note. What is your mission? What is the thing that you're passionate about? If it's not your family, an immediate family.
Yeah, for her, it's living liquidity, right? But also future impact. Living liquidity, future impact. And what I like about it is the whole system's tax free, right? That's kind of the really neat thing. Not only is she looking at the nonprofit coming in, but here's something else to be cognizant of. She can name the nonprofit as the owner, not just the beneficiary.
Hmm.
So now talk about the multiple tax benefits that she can get from running this through a system.
I didn't even think of that one, Jeremy. That's awesome that she has more tax benefits and the fact that it's already grown tax free, loans are tax free, distributions tax free. It's a very tax advantage system. And why is that? Because it's existed longer than our IRS code or tax code or anything else, right? It's been around for 200 years. So, and to bring up the woman I was speaking to and her husband, their goals was a little different than this woman's, right? They are on the journey, and then she hadn't thought about what the beneficiary would be yet. And so for her, she had a specific liquidity where she wanted to take back control of the mortgage, of the interest, paying it to, like I was sharing with you earlier, she's still paying 70+% of interest to the bank. She's like, I don't want to keep giving our hard-earned money to the bank. Our goal is either to buy a retirement place in Florida, to buy a retirement place in Georgia where my aunt is, and we want to take back control of the money. We're saving, we're good savers, we're saving 4 or 5 grand a month. We want to put as much of that liquidity into our system, take out the loans, pay off our mortgage. Maybe she'll get to a point where that turns into an investment where she can pay the mortgage from the investment. But for now, she wants absolute control, no debt to anyone else, and she's going to build up that liquidity to support their retirement. And then still, it's going to have a death benefit. So I told her, like you, I said, hey, let's start thinking about things that you really care about above and beyond your retirement, above and beyond that thing, because then you have a purpose. And we really want to work with those builders that have a purpose because it is important that we're positively impacting our communities.
Yeah. If I had to think about outside of my family, who else would I end up naming as a beneficiary? I think of my alma mater, right? West Point, the academy. It was life-changing for me. Absolutely life-changing. I wouldn't be the man I am today without the academy. And if there's a way that if my beneficiaries and everything is kind of set up, if I set a new family bank, a new infinite banking policy aside, and I name just that one beneficiary, the rugby team that helped mold me and create the man that I am today, I think that would be a really neat design just for that one policy, right? So the living benefits, the living liquidity, I'm going to continue using it the way that I've always used. But now I also have the way to give back generationally well beyond me, right?
And then and that's awesome. I can't, I forget sometimes you play rugby, you're a wild man. I went out for rugby for one day, just so everyone knows, at RIT, and we were hitting sleds, Jeremy, without pads on them. And I was still around maybe like $175 and still in pretty good shape after playing football in high school and playing football for 12 years. And I was the smallest guy out there by 25 pounds. And after, smashing into the sleds without any pads on, after doing a couple of what they call rucks, like after a couple of those, I was like, you know what? I don't think I'm tough enough to play rugby. I'm not even going to lie. Like, I go get beat up in Taekwondo and things, but like rugby, I'm like, there's something wrong with these guys. So, Jeremy, I can see why we're partners. There's something wrong with you, man.
Yeah. Maybe that's what it needed is knocked a few screws loose. I don't know.
Yeah, but now you found them, you put them back in, and now you're changing people's lives. And you talk about with this woman, you talked about how this goes beyond, right? How there's another phase to this that we haven't even dived into yet. Like, how do you extend these benefits to the people that are supporting the cause that you're passionate about it? If it's called infinite banking because, folks, the possibilities are infinite. You can do so much with just changing one thing, and that is, where are you storing your liquidity? And we keep saying liquidity over and over again. All we mean is your savings, paying yourself first, doing what the wealthiest have been doing since 1910.
Yeah, actually, that was one of her follow-up questions is, can I put this on my staff, right? So she's thinking already beyond her. She's like, if I can get the death benefit, which I really think, I don't like the word death benefit. I think it really is legacy value. because you are passing on a legacy and there's a dollar amount to it, right? So there's a value behind it. She's looking at passing on that legacy value, that tax-free value to the nonprofit. And she wanted to figure out, is there a way that I could extend this to my employees as well, the employees of the nonprofit? And I was like, absolutely. In a traditional business world, we call it a non-deferred compensation plan, an NQDC. And the guy who did this the best is Ray Kroc, right? Founder of McDonald's. You know who else is like taking it to the next extreme is traditional banks. It's why you walk into every bank and you see a vice president of this, a vice president of that. They put those policies on key employees. I said, but if you do it in a way and you structure it appropriately where the nonprofit is the beneficiary, you can extend the cash value to provide employee benefits, right? Benefits that are inside of the system to help them while they're living. And then after they're passing, take, let's say, $100,000, $200,000, whatever you decide, that goes to their family. Anything over and above goes to the nonprofit. So now we have a tiered system where everyone who actually works at her nonprofit will be able to give a portion of their legacy value as well to the nonprofit. So it's not just a fundraising. Anyone who's done fundraising, which by the way, I've done fundraising for a veteran nonprofit, it's not easy, right? Fundraising is not easy. So here's a way to help extend her legacy in the nonprofit outside of fundraising and ensuring that everyone who's a part of the nonprofit can also do a giving after their passing.
And the exciting part of that is you're not only building up, like you're changing habits. The builder mindset, her mindset, this shift that's made in one conversation. Imagine what that looks like a decade from now. Imagine what that looks like just a couple years from now. Like the deeper she goes down the journey of becoming her own banker, of really taking back control, creating the guarantees, and moving away from the traditional banking system as much as possible for all her liquid needs. Liquid, again, just meaning cash accessible for life events, which are always happening. Like Jeremy always gets right because he's never got this question wrong. He knows that the one guarantee in life, and you guys probably, hopefully, are a little bit sick of me saying it, is what? It is change. Change is always, always guaranteed. And so she's building for that. She's also now teaching her staff, helping her staff take care of themselves, helping create more liquidity. And this is going to, similar to the Rockefeller waterfall method, now for this charitable organization, you create something that's way better than trying to fundraise. Because now no matter what, you're multiplying the money. Like whatever liquidity goes into it, you put a multiplier on that. And that's going to come back and replenish the system over and over. And then she's putting the systems and processes in place. This is what it looks like to start thinking long term. So if you were thinking prior to listening to this that, hey, there's no reason for me to do this because I don't have a spouse, I don't have children, I don't really have anything in this moment, that I'm like, yes, I want my money to do more in one job, but I don't think whole life insurance, that traditional boring thing, is for me. After listening to this, hopefully you're coming away with a different take on what's possible.
Yeah, what I love about it is a lot of folks will say, hey, because I don't have a family, to your point, this isn't for me, but it really is for anyone who values liquidity and purpose. Liquidity and purpose, right, at the end of the day, because we are practicing banking. We're using a vehicle that has all these tax benefits. And to your point, there's a multiplier effect. It's not just a multiplier effect inside of the cash value, it's a multiplier effect in front of the legacy value as well. A multiplier in the cash value, a multiplier in the legacy value. The whole system starts because you actually put it in place. You've got to topple the first domino. And a part of that toppling is just coming to the table and having the conversation with Jason, having the conversation with Jeremy. We can show you how this is structured. I mean, if we're able to structure it for individuals and business owners, we can structure it for your charity. We can structure it for your purpose. You just have to decide what is your purpose. To Jason's point, what is your purpose? What do you want that to resonate throughout history, throughout everything else, for the next 100 years? What do you want that to be for you?
It's a beautiful segue to the ending here. So as you're all listening, like Jeremy said, what's your purpose? Write it down. This is not meant just to entertain you because we're not that entertaining. I don't even know if we're funny more than once an episode, you know? So write down what your takeaway is. Make notes. Make notes. Don't take them. Make them. Make something that's actionable that you can do it now. Schedule a call with us. If this has caught your interest, you're like, hey, I need to know how to do that. I'm not sure I understand this fully. Guess what? We have tons of education out there. Book the call today. Have that conversation with us. And if it's not us, find somebody that is that certified infinite banking practitioner that's going to be able to hold your hand, meet you where you're at, and help you set up your purpose, your vision while maintaining liquidity and guaranteed results as long as you do the thing. So, Jeremy, everyone listening, they're already in banking.
You're just not the banker yet.
Be blessed, you all. Thank you for being here. We always appreciate your time, your energy. Jeremy, I will see you in the next episode.
Take care.
Thanks for joining us on WealthWise Banking. If today's episode inspired you, please subscribe, leave a review, and give us a like. It's a simple way to help others discover these empowering strategies and join our community. Together, we're building a network of people who believe financial freedom is within everyone's reach. Remember, financial independence is about making every dollar work for you, one step at a time. Until next time, stay inspired, stay in control, and keep building your legacy the wise way.